If you hold a real estate note and you're thinking about selling it, the first question on your mind is probably, what's my note actually worth? I'm Phil Gorman, and I've been buying and selling notes for over 40 years. Today, I'm going to walk you through the 7 factors that every note buyer looks at when they evaluate your note and make you an offer. By the end of this video, you'll know exactly what drives your note's value and what you can do to maximize it. Here are the 7 factors. Think of these as the buyer's checklist. The stronger you are on each one, the better your offer will be. Factor number 1, payment history. Has the borrower been making payments on time? A clean, consistent payment history significantly increases your note's value. Missed or late payments are a red flag. If your borrower has been paying like clockwork for months or years, that's gold to a buyer. Factor number 2, credit score of the borrower. Higher credit means lower risk. Even if the borrower is paying on time right now, buyers look at their credit score to predict future behavior. A borrower with strong credit will get you a better offer. Before you sell, consider asking the borrower if you can run a new credit check. An improved score can boost your offer. Factor number 3, property type. Single-family owner-occupied homes are the most desirable. Buyers love them because they're the least likely to default. Multifamily properties and commercial properties are more complex. Raw land and mobile homes? Those reduce value significantly because they're harder to resell if something goes wrong. Factor number 4, equity in the property, loan-to-value ratio. How much equity does the borrower have? The more equity, the less likely they are to walk away from the property. If your note balance is $50,000 and the property is worth $100,000, that's strong equity. If the balance is $90,000 on a $100,000 property, that's risky, and your offer will reflect that. Factor number 5, interest rate. Higher interest rates are more attractive to buyers because they mean higher returns on their investment. If your note has a competitive interest rate, that works in your favor. Low interest rates? Your offer will likely be lower to compensate. Factor number 6, length of term remaining. Buyers generally prefer shorter remaining terms. A 25-year note requires a long wait for their money. A 5-year remaining balance is more appealing. If your note has a balloon payment coming up, that can either help or hurt, depending on whether there's enough equity in the property to cover it. Factor number 7, documentation and legal clarity. This is huge. Clean, complete, well-documented notes command premium prices. Do you have the original promissory note, signed by the borrower, the deed of trust, proof that it's recorded in the county, a clear payment history? Missing paperwork will either kill your deal or drastically reduce your offer. Buyers want certainty, and documentation gives them that. So there you have it, the 7 factors that determine your note's value. Now here's the thing. Most notes aren't perfect on all 7 factors. That's normal. But the more you understand what buyers are looking for, the better you can position your note, and the stronger your offer will be. If you want to know where your note stands right now, I offer free, no-obligation note evaluations. Just reach out to me at phil@philgorman.com or complete the form in the link below. I'll take a look at your situation, walk you through these 7 factors, and give you an honest assessment of what you're working with. No pressure, no sales pitch, just straight answers. And if you'd like to go even deeper, download my free report, 5 Insider Tips to Maximize the Value of Your Trust Deed Note. You'll find the link below. I'm Phil Gorman. Thanks for watching, and I'll see you in the next video.